Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? It's Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We've got the S&P down about 10 points this morning. We've got the Nasdaq down about 20 points this morning. So what does that mean is going to happen for the rest of the day? Real quick announcement today. We have something super exciting. Between the week of October the 20th, October 20th is going to be our free preview week. So if you are a YouTube viewer, if you are a viewer of our normal YouTube channel, the TradersArmy.com will have a free preview week, the 20th through the 25th. So you will be able to come on board, join us in our live trading rooms, our Sunday night session, our Tuesday night session, and our Thursday morning live trading sessions. So go to TradersArmy.com. All you got to do is be a free member. So sign up as a free membership, and you will get access for the entire week, which includes the trade feed and the trade worksheet. Okay, let's dive in. So the S&P this morning, we're down 10 points. Now the 10 points that we're down is really from where we ended, obviously yesterday, which was right here, and now we're sitting down around this level. We looked at a potential breakdown yesterday with this little breakdown here. However, that breakdown was really very short-lived, and one of the things that we talked about in the trade worksheet, and once again, this is something that you guys will get access to during your free preview week, is, that we are take a portion off the table and moving stop to break even out of the NQ and the ES for a small profit, and that was done at 9:34 in the morning. Now, the idea there is that we wanted to make sure that we did that super early, and the reason being is because the markets really gave us an opportunity to take a little bit off the table, but it wasn't a sustainable move. And the reason that move didn't fulfill and didn't go all the way was because we had run into some demand over here to the left, and we ran into this demand over here to the left. Now, this breakout typically would have been just fine on a breakout, except that we had that demand that caused price to rally up out of that little zone. So price did rally from that level. We've come very close. We came super close to our confirmation short, but we were unable to get filled on our confirmation short. So we have two levels above that both will still serve as supply levels going forward. In the Nasdaq, very similar picture in the Nasdaq, except we came to the confirmation short and we chopped around inside of it for our 6 candlesticks rules. And so our 6 candle rule kicked in, and it was a break-even trade, essentially. And so now we've still got this level up in here that's not yet been touched, and I still think that level is fairly valid. Now, I would be a little concerned with the Friday morning sell-off, the Friday sell-off that we've been getting recently, and it's possible that we could break down below here and get a little bit of a sell-off at some point. So keep an eye on that for a potential. Crude oil was another one that we in the trade feed, we had taken the stop and taken a little bit off the table off this little bit of a breakdown, and now when I look at this level, oops, I just want to remove this one drawing. Now when I look at where we are today, we've hit our head off of this level here a couple of times. So now I don't really want to take a breakout above there because of this wick over wick level that we've got sitting right in here. Now, this wick over wick level is not the greatest area. It's not the best level because of all the basing we've had below it. But we very well could get a reversal up in here. We also have this little area up here. So both of those areas there do exist for potential reversals. So moving over to gold, when I take a look at gold. So gold, we had our breakout above this level. Got a nice little run on gold, another one that had a little bit of a profit take. I think that gold, if the markets continue down, gold has another opportunity for a breakout up. And if the markets rally up hard today, we may see gold break out down. So gold could move kind of either direction. Just make sure that you keep your stop fairly tight. Once again, I think that, looking at the markets in general, I think that we've got a better chance for a little bit of an early day move higher, and then an early day move higher on the S&P. Let me just pull this back up. An early day move higher that will pull us up into this region, and then maybe an end of the day sell-off. So just keep an eye for that. And then that would be an inverse correlation probably in the gold markets. Looking at bonds and currencies, so in our bond markets, we had a confirmation short right here. But remember, in an upward trend, all of our supply levels become confirmation levels. And price blew through there before giving you a chance at any sort of an entry. So that level was not that level was invalidated. It was so you could not take that particular trade based on the violation of the move. And so now you'd be looking for a decent area of demand on a retracement. And I think the best area to look is right down in here, which is the origin of this big move higher. Inside of the Aussie, so in the Aussie, we are almost back to the top of this big single candlestick. Remember that this is a strong move down on that candlestick. That was on some sort of an announcement, and that announcement that caused that price to move down created a speed candle, and speed candles do tend to get retraced, and we are in the process of retracing. Now, normally I would look up here as a supply level, but with this long wick, it makes that supply level really gigantic, and we're already pretty deep into it. So I need to look and say, okay, is there an area above here that's better supply? And none of this is really clean supply. So, looking at the 4-hour version of this, we do have a decent move up going through here. Our next strong supply isn't until way over there. So what if we look a bit smaller and we check for demand somewhere down in here, this little area here, for a potential demand reversal. In the euro, so the euro, we actually did get a nice little move away from our confirmation short. So some of you, if you caught that euro trade, great. It came to the opposing fair price value area, so it went right from its entry to its target, and it's still below that area at the moment. But I think that the next more logical move is for price to continue to rally higher. And if we do rally higher, you could get a breakout above one of these areas in here, so keep an eye on that for a potential breakout. If you look at a 15-minute chart, you can see the breakout chance a little bit better off of, it's not truly a double bottom, because double bottoms have to occur after a pronounced down move. All right, next would be the Canadian dollar. So in the Canadian dollar, we had a very strong downward move. And that strong down move creates a speed candle, which we anticipate eventually will get retraced. Maybe not right away, but if indeed that does get retraced, you could see a little bit of a move up from this bit of a strong basing pattern in here. And looking at this, I'm actually going to put a second set of lines. I didn't originally have this set, but I think that this is worth identifying as well. So you have two areas here in the Canadian dollar. Great British Pound, Japanese Yen. So the Great British Pound we actually set up was a bit of a level over top of a level, and the market just missed us, just a bit outside, as they would say in baseball. And so the markets rallied up, came really close to there. I still think these levels are valid, so I'm going to leave them in. Japanese Yen, we got a brilliant move. We had a breakout above this area, came to supply, and then we got a touch and go move away in that supply area. So I'm going to leave that supply area intact because it was just a touch and go, but I switch it to a confirmation short going forward. So be aware of the Friday sell-off. If you have positions you're going to hold over the weekend, make sure that you understand how to hedge those positions. And if you have any questions, please send us an email, support@tradersarmy.com. I will send you soon.